Hey guys, Tony, good morning. This video is going to be kind of not randomish, but there's been a lot of news about Cathie Wood, and it's a little bit of a, what is it called? Um, Not concern for people. I think a lot of people are just kind of like thinking that Cathie Wood is making a bad decision by selling her Tesla to pick up other stocks that are hurt. I don't really hold any Tesla. I hold about I hold what $3.50 a Tesla. Um, this was back from my swing trade. Remember when I bought it at 714, sold it like a grand or whatever, or like $900. Let me see if there's anything. What else can we? Are there any similar things? There we go. So there isn't any that I can do a recommendation here from Robinhood, but essentially what's going on is Cathie Wood is selling her Tesla portfolio, or basically her holdings in Tesla, to buy other stocks that have been beat up, any other stocks that she thinks are going to start moving, right? So I'm pretty sure she was selling Tesla to buy like a little bit of Roblox when it went back down to like, it was down here at like the, what is it called, like under $100. I know she was selling like other stuff, and people are saying that it's a really that she's kind of falling trap to like a new retail investment mentality, where she's selling her things that are at like her green portfolio that's actually doing really well and getting into smaller positions. I actually think she's doing the right thing. And that's kind of what I recommend all the time too. I always tell you guys, I'm like, there's a reason why you should have a high conviction, long-term portfolio, and why most of your holdings should be in Microsoft or Apple or Google or whatever, right? As long as it's a blue chip stock, I think it's fantastic. And I think most of your money should go to those stocks. And the reason being is because, if you want to enter, more than likely when it comes to bear cycles or bear markets, meaning ones like this, you have big positions sell. You have little tinier market cap sell off. So you have Neo go down, you have PLTR go down, you have things like MU, you have things like BBIG, you have, I'm sure you guys can think of a lot more stocks, right? A lot more companies that are currently down. But if, let's say right now, right, all big tech is up. You have Tesla relative highs, basically, right? We're at over $1,000. I mean, come on, like all-time high was $1,200. You're still at $1,000. Like, Tesla's doing really well. You have stocks like Amazon, Google, Apple. They're all doing extremely well, right? Look at Apple. Look at Nvidia is at all-time highs, right? Look at this. Nvidia is essentially at basically at all-time highs at 294. And I think what Cathie Wood is doing is her original target for Tesla is still going to the freaking moon, right? So my old recommendation, or my still recommendation, is you should put your money into a market that for sure is going to keep going up. And that's why I say Microsoft, Apple, Google, Starbucks, Walmart, all those in the video, those are all going to keep going up. So maybe in a year or so, when those are all like maybe 20, 30, 40, 50% up, you can start selling, part of your positions in that one, and use that profit to enter smaller cap stocks, right? Or enter some businesses that were hurt in like the last couple of maybe months, year, whatever, right? But that's what you're supposed to do. And I think Cathie Wood is getting a lot of crap for that, because they're saying, hey, if your Tesla is so up, why are you going to sell these? Why are you selling your Tesla to get into stocks that are not doing well right now? And that's exactly the point, right? That's exactly the point of why you have a long-term portfolio, or at least why you have most of your money into a couple of stocks that you think are going to do extremely well, so that you can take profit from those, put them into smaller businesses or smaller stocks that are hurting, and get the possible gains from those recovering, right? That's the point. If you're still bullish on that initial investment, like for example, if she's still bullish on Tesla going to $5,000, it doesn't matter whether she takes money or money or not off the table, because she's still going to see a 5x in the long run. And she's still going to have more money to grab from Tesla to put into stocks that have actually been hurt. And that's the point, and that's why I agree with Cathie Wood. I think Cathie Wood is doing exactly what she should do. She should be taking money from her stocks that are making her profit. Not everything, not all the profit, but this is exactly what you should be doing. You should be grabbing house money, because profit is basically house money, right? You should be using that house money to put into, stocks that you think are going to be doing well, more like riskier stocks, right? instead of using, your own money, instead of you getting like $500-$600 or like, a couple bucks from your bank account and using your own money, use money that's already in profit. So I actually, for once, agree with Cathie Wood. I think she's doing the right thing. I think that taking money from your, whether it be crypto or stocks, just anything that's in profit, I think taking profit and using that to try and profit more is the right way to do it, not using your own money and trying to use that for profit, right? Because I'm all about compounding. I love compounding, right? And that's if you've actually made money, right? So I don't like putting $1,000 into a position and then getting $1,000 from my own bank account and then putting it into another position. I like putting $1,000 into one position, seeing how far that can go up, and then partially selling like maybe half of that and then putting it into something else. That's what I like to do, right? I like to use the current money that I have in all of my, in my broker and my exchange to make money, right? And I think Cathie Wood is doing the same thing. She's using all the profit that she's made from Tesla and she's putting it into stocks that have been hurt, and she's putting it into stocks that she thinks are going to recover and ultimately give her a return, at least from the TA or the research, everything that she's done, right? So I think Cathie Wood's getting a lot of crap for this. I think if she's selling Tesla, if she's selling her Tesla and it's already in profit and she's putting it into smaller businesses, smaller stocks that she thinks is going to recover, I think she's doing exactly the right thing. And I don't know why she's getting crap for it. So it's just something that I wanted to point out. Cathie Wood or Woods, whatever, your actual last name is, I agree with you 100%. I think what you're doing is the exact right thing to do. But yeah, kind of around the video, but I think Cathie Woods is right. I think she's doing the right thing, selling off Tesla and buying smaller cap stocks where she thinks that, they're going to recover eventually. So I'll see you guys later. Bye-bye.